Selling Houses in New York show. I am Michael Pinter, where I teach you how to start flipping and wholesaling houses in New York, or if you are already doing it, how to grow your business. Now, I hope this is starting. Okay, so got a general question again, and it is: do real estate investors pay taxes? Now, the reason I believe for this question is that a lot of major real estate investors don't pay taxes because if you are a buy and hold investor of major property, there is something that the US government calls depreciation, which means if I buy an asset, I can depreciate it because it's going to be worth less as time goes by. And I can take that, which really depreciation is there's no cash involved. Something just depreciates by itself. And I can write that off. I can take away from my gain. So I can make $300,000 on a property. But if I can depreciate $300,000 on it, I have a zero gain on it. And that is a tool that a lot of real estate investors use to pay very little taxes. So there are a lot of large real estate investors, many of whom live in my neighborhood, who buy properties and will never, ever sell them. What their plan is to die with them. Now that sounds a little nuts if you think about it, but I remember I had a cousin who used to buy parking lots, and he would say, listen, I make money when I refinance a property. As the value goes up, he would refinance and take cash out. He would have a loan. There would always be enough income from the property to pay off the debt service, to pay the monthly payments on the loan. He would have enough depreciation coming in that even the net income he had, he wouldn't pay taxes on. And the idea is that when he died, and he did die, um, let me take a step back. So understand what depreciation is. Depreciation says I'm lowering the value of the property. However, so let's say I buy a property for $5 million and I depreciate $200,000 a year. That lowers what my cost basis is. So that if I sell the property in 5 years for, let's say, $6 million, all of that depreciation gets recaptured. The only way it doesn't is if you drop dead, theoretically. When you die as the owner, then your heirs get a step up in basis, which means it doesn't matter all the depreciation you took, that all that is gone. All that doesn't matter anymore. I don't believe there's depreciation recapture when there's a step up in basis. Now, all of these tax rules could change, but there are very, very, very smart, and there are a lot of real estate investors who pay very, very little taxes, even when making a lot of money, due to using depreciation. Now, there is something called, what's the word I'm looking for? You can do what is the word? You can do a cost segregation on a property where you can depreciate some parts of the property even sooner. And a lot of people are doing this, even on single family homes, so that they can get more of a tax benefit right now. Again, now what I do, where I buy properties short term for usually less than a year, I do not have a lot of tax benefits. If I do keep a property over a year, then it becomes a long-term capital gain. Now I get asked all the time, well, what about short-term capital gains? People don't understand this, but if you have a gain, you buy something and you sell it in less than a year, there's no such thing as short-term capital gains. It's simply ordinary income. If you keep things over a year, again, unless all the tax laws change, which could happen soon, then it's a long-term capital gain, and it's taxed at a much lower rate, right? For a lot of people in certain tax brackets, it's taxed at 15%. I know people that spend their whole life trying to avoid paying taxes, and then when I tell them, if you really look at how much the taxes are, it's going to be less than you think. Now, in certain states like New York, is also state capital gains tax. Lovely. But you need to understand that if you're making any profit on something for less than a year, it's just ordinary income. So for most of my income is taxed. Right now, I can write off all of my expenses, right? All my overhead expenses, my payroll expenses, my incredibly expensive marketing expenses. All those things go against my income, but I don't have a lot of the tax benefits that we just discussed. Now, I do have some rental, so I do get some depreciation. And sometimes I hold a property for more than a year, so I get long-term capital gains on it, which gives me less tax on it, so that's great. But most of the time I don't. And if you are wholesaling or you are rehabbing, rehabbing sometimes takes more than a year from the time you buy it to the time you sell it. But if you're rehabbing quickly, which is what you should be, then all your income is taxed at regular income rates. So you're going to have to pay taxes on it. There really is very little to do. That is a downside. When we buy things to hold longer, there are a lot of tax advantages. The government gives a lot of tax advantages to holding property, right? Besides depreciation, um, you can expense out all of your any expenses involved in the property, including your debt for it. So uh, that is all the interest you pay on it. So you have to segregate when you make a payment, um, which part of it is interest, which is an expense, and which part of it is just principal, which is not an expense. So these are some of the little things that you have to think about, unless you're going to use a bookkeeper and or an accountant or a controller. Um, but most real estate investors that do what I do, that are short term, are going to pay taxes. If you are holding rentals, it is very likely, if you play your cards right and do things that are smart, that you will not have to pay much in taxes at all due to depreciation and due to other ways to avoid it. Another thing that people do, very smart people do, that I'm considering, is they buy their properties in a retirement account. So let's say a Roth IRA. So just to explain, and I'm not a tax professional nor a lawyer, so don't take any of this as advice. But the difference between a traditional IRA is that you put in the money tax free. So it's tax exempt. That means if I make $100,000 and I put $5,000 into my IRA, I only made $95,000. To me, that's not a smart thing to do. It seems like a smart thing to do, but a better thing to do is to pay into a Roth IRA, which means you still made $100,000 that year. But what happens now when you put the $5,000 in is that you never pay taxes on the gain in that IRA. So let's take both examples. What a lot of smart people are doing is they're taking self-directed IRAs, which means they take an IRA away from Fidelity or Vanguard and they put it into a self-directed company. If you need help with that, I can help you with that. You have to pay a few $100s to a company that does it. And then they're buying the properties or wholesaling the properties in that IRA. Now, if you do it in a traditional IRA, eventually at age 69 and a half, you're going to have to get distributions on that, and those are going to be taxable. Basically, the government says you didn't pay taxes when you put the money in. In fact, you wrote it off, so you made less income and paid less taxes, but now you're going to pay us taxes when the time comes. With a Roth IRA, you're giving it an after-tax dollar, so I still made $100,000. I still have to pay taxes on $100,000. I take $5,000 of that out. I'm just throwing a number out of there. I don't know what the limits are, and I'm putting it into a Roth IRA. Now the government says whatever that grows to, is not taxable. So I know people that are building up millions and millions of dollars in a Roth IRA, and eventually they're going to take that money out all tax-free. So for example, they buy a property they put $50,000 into a property, borrow the rest, and they end up making $100,000 in profit. Now there's $150,000 in that IRA, assuming the $50,000 was put into that Roth IRA legally the way it was supposed to. Now there's $150,000 in it, and it's not a taxable. When they take that money out, it's not taxable at all. And then as that grows, it grows tax-free. So it's a much, much smarter way. In my opinion, a Roth IRA is a much better tool than a traditional IRA. I know that's not what people have said. They said, oh, you want to get the deduction this year, but it seems stupid to me to put all this money into an IRA and then one day have to pay taxes on it. Where if you just take the slight difference in paying taxes now and funding a Roth IRA with your after-tax dollars, it could grow to be millions and millions of dollars that you're going to get with no taxes on it. To me, it seems like a better move, but again, consult your tax professional about how that works. What the hell else am I going to talk about now? Oh, so that's pretty much how it works when it comes to taxes. If you have any questions, I'm happy to help you with this, although I am not a tax professional. I would say that most major real estate investors do not pay a lot of tax. They'll pay less tax than other people because of the favorable tax laws that encourage people to own property. I hope this was helpful. If you're interested in all the ways I can help you, go to howtoflipnewyork.com. If you're interested in a course I have that teaches how to do what I do, go to howtoflipnewyorkcourse.com. If you are interested in finding out more about one-on-one coaching that I offer, go to coaching.howtoflipnewyork.com. If you are watching on YouTube, please subscribe. If you're watching on any channel, please click the thumbs up. That really helps my SEO, my search engine optimization. A lot more people have been seeing my videos, so I really appreciate all the thumbs up I've been getting. And please keep the comments coming. I try to post 5 times a week. I don't always know what to say. Your comments give me topics to discuss. You can ask any question. It doesn't even have to be about the video you're watching. If it's a simple answer, I'll just reply with an answer. If it is something I've covered before in depth, I'll send you links to a video or multiple videos. And if it's something new, then I will do a new video on it. So please, please, please keep the comments coming. I really appreciate everyone that's been watching, that's been liking. So thank you very, very much for watching.